Welcome to Trade the Trend. My name is James Boyd. Today's date, August 13th. Hopefully, wherever you are, the weather is cooling down a little bit. I'm in Salt Lake City, Utah, and it's been actually pretty nice in the morning, which means football season is around the corner. Type in the chat who your team is. Right now, we're all undefeated. We should feel amazing. That might be different in week 6. All right, type your name, type your favorite team in the chat, and have a little fun with that. Now, we also got with us in the chat with us Gary, Heather, Janelle. We got Jay Richardson, Olga, Jill, and many others. Welcome. This is live, and it's also being recorded. Now, just real quick as we get started here, want to give us a quick reminder, a couple things that we want to bring up. First off, let's go here. Bring this up. So first off, this is when we say live and recorded, where, okay? So if you went to youtube.com, you just typed in the search field, Trader Talks, Schwab Coaching Webcast, you're going to come to this page. This page, if you say, I haven't seen it before, or I haven't subscribed, dead center in the middle of the page, you can subscribe for free. Anything that you subscribe to, meaning you track that channel, your subscriptions are on the left-hand side, okay? Subscriptions doesn't necessarily always mean you pay. In this case, it's free, okay? And that's where you'll see that right there, the channel. Now, a couple things that we've talked about this week, okay, that I want to make sure you're clear on. On Monday, we made a specific point of talking about mental block of buying stocks at highs. That was on Monday. On Tuesday, we talked about long calls versus long synthetics, okay? We kind of talked about the idea of learning to leverage, especially when some things have sold off, especially when the investor says, look, I'm pretty confident of the move, and the move might happen quickly. And the third thing we talked about yesterday on growth and value, the word of the day on a continuation theme from yesterday is we talked about our semiconductor stocks on potential sale. Oh, okay. Let's just leave it at that. Now, remember when we discuss these things, we'll talk about them in terms of stocks and options. Remember that options carry a high level of risk and are not suitable for all investors. When we talk about options, all strategies, they're not the same, okay? And so some, just review the differences and see if it's something you would consider. Now, when we talk about our examples, remember that the Paper Money software application, we use that for in-class examples to practice strategies. Now, if you also said, well, James, I don't see anything on ETFs, that will be tomorrow morning at 9:30 a.m. Eastern. Kevin and I will do that on the Trader Talks channel, okay? So make sure you come to that, because just because I don't talk about that on the other classes doesn't mean we wouldn't, per se. The classes are designated to talk about what the titles are. So I talk about the ETFs tomorrow because that's what the title is, okay? Now, remember that all investing involves risk, including loss of principal, and let's go ahead and kick it off. Now, what's the word of the day? Semiconductors. That's the word of the day. Now, if we go back to this chart just real quick, the one kind of area that I'm going to start with first, if there's anything, if I said, if today was my last day at the office, and I said, hey, what do I wish somebody would remember about how James taught or what he taught? I wish some words that would come to my mind would be the 10-day moving average, which is really the gauge of momentum. Second is diagonal resistance breakouts, okay? Other things that I would like to kind of say that maybe I left an impact on is really snapback rallies. Stocks or indexes or sectors that are below support that should be resistance, and all of a sudden it's not, and they snap back to the upside, okay? Sadly, I used to go short those things, and they would snap back, and they were some of the biggest losing positions, and you have to learn from those, or you have the opportunity. Those could be some of the biggest moves. I mean, just look at WDC, okay? Now, the biggest thing is when you look at the NASDAQ, and we kind of talked about this last Friday, is could the NASDAQ kind of be setting up for that continuation of that longer term trend? When you look at the NASDAQ, this move in the NASDAQ, for the most part, happened without the semi-participation. Cloud, software, hardware, They were pretty much the ones making the move in cybersecurity. And now you got these the semiconductors, word of the day, getting a little move. What's the chances of us actually getting up to that level? You tell me what it is. Many investors might say it's pretty high. Weekly chart on this, why do we care? Well, because we know that not everyone and their mother and father looks at the daily chart. Some investors are looking at intermediate to longer term. On the weekly chart, this is what it really is showing, that bull flag, if we're Canadian 8, bull fleeg, however you say it, we love all people. And what you're now going to see, if you look at this on that chart, that daily chart on the trend candlesticks, there she is in all of its glory, okay? Two orange candles, not much of a pullback. Remember what we said before, if you only get orange, that is a very shallow pullback. And then what do we see so far? Today, green candle, okay? Now let's go back to this. Let's pull up the semiconductors now, since we said that's the word of the day. Semiconductors, we've been monitoring that reversal. Remember, we talked about 10-day moving average. We talked about diagonal resistance breakout. When you think of diagonal resistance breakout, that is a bull flag. That is a bull flag. Hello, okay? Now, if you look at this, we've also, something else I want you to kind of remember is pullbacks of less than 3 days. 1 day down, green candle. 3 days down. When you say days down, what do you mean? Red candles. 1, 2, 3, green candle, please. Okay? And you had 1, 2, 3 red candles, and then there's green. So far, if we close here, this would be the close above the high of the low day. There's the green dot on the chart. Now, it tells us something's moving in the semiconductors. Tell me which stocks, and by the way, Cameron May's in the chat, tell him as well. Okay. Thank you, Cameron, for being in the chat, and let everyone know, Cameron. If you have a question, you're going to see Cameron May's initials in the chat, CM. So that's who's in the chat. And so just if you have questions, go ahead and ask Cameron. I'll be looking at those questions as well. Now, Pia says, doink, hit the ceiling on the S. Now, it's kind of funny you say that because that was like the next thing. Now, I'm concerned. I was a little concerned on this about 15 minutes ago, maybe 20. Yeah. Let me go back to the paper money account. So we did yesterday the SNDK. Now, I'm not even sure if it's there. I know before we had a target on it. Okay, there it is. So here it is. Now, I want to go back to kind of yesterday for just a second, okay? And sometimes it's just so easy to say, oh, yeah, I nailed it, okay? Well, I mean, let's put that in kind of frame, okay? This is what it looked like. You had a diagonal downward slant, breaks out, and, this is kind of what we had. Now remember, one of the things that can kind of cause people to doubt is red candles, okay? You got to remember, a red candle below its moving averages and red candles above their moving averages are not the same thing. Red candles above the moving averages are kind of like the soft days. They're slight sell-off days, but the support is still intact. Those red candles could be manna from the sky, from the technical analysis people up there. They might be saying now the price is falling back down a little bit closer to support, allowing the investor to try to consider a close above the high, the low day entry, hold and or CHG. If you say, I don't know what those are, go back to what I posted on last Friday. Hold versus CHG right on my X page. Now, yesterday, so this is the way it ended yesterday. It ended with a slight red candle. Now, today, well, and this is kind of what we were kind of mentioning. Someone asked, would you ever consider leveraging the position? Leveraging the position. We said absolutely not, okay? Because the point movement on these on a relative, on an ATR basis, so severe by themselves. I mean, it's going to feel like it's leveraged. Now, we only got in with 4 shares because that's what the paper money account would allow. Now, if we look at that position, 4.41 shares. Now, that position purchased yesterday at 920 in the growth and value account. We looked at the fundamentals, and again, everyone and their mom typically would say, hey, it's overvalued because it's too high, it's too high, it's too high, it's too high. That is absolute hogwash, okay? Just because something is high that's overvalued. You haven't even looked, okay? So if we take a look at this, 1378, here we are at 1564, and now the question becomes, do you raise your target? Do you be greedy? Go for more? Or do you say, look, just give me the gains? Now, if we take a look at this, why did we set this right at 1572? The reason why we set it at 1572 is we talked about lower highs. Can anyone tell me how we can clearly identify lower highs? Tell me how. How do we see lower highs? We said there's a simple way to do it. Lower highs are where the price stopped going up, which would be green candles, and then started going down, which would be red candles. So at the tip of every lower high, green candle, red candle. Can you identify, circle the red and green candle side by side there, here? And so what we did is we put the target right at the last lower high. Now, James, hold on. You didn't put the lower high right there. Well, because we were already right there. And it wouldn't have made sense to put the target right there because it wouldn't offset the risk. Now, I need some help here. Okay. Now I'm a man and I usually don't ask for help. I admit it. Okay. I've been working on that. I'm not saying I'm good at it, but I'm trying. Ladies, give me some encouragement. Okay. Now here it is. If we take a look at this, did anyone laugh at that? You should. Now, let's say the investor said, James, I want to raise my target. I'm going to move that target right to about right there, 1794. Now, I can hear someone saying you're so greedy. Okay. So what I'm going to do is I'm going to move up the target to 1794. As far as the stop, I want to go back and look at this 1341. Man, we got so much to do today. We're going to have to let it rip. 1314. So if we set the stop underneath today's low by about 2%, it's going to be 1314. It's going to get us to about right there. Now remember how the stop works. It's saying if it goes down to that price or less, sell the shares. All right. Now, problem, we don't know what's going to sell for. That's the con. If you say I don't like that, you might consider buying puts. It's the right to sell at the strike price. Okay. Pros and cons of each. Now, what I'm going to do is move up the stop, 1314, and I'm going to raise the target. Okay? Yeah, well, thank you for that, Pickle. Pickle said that was tough. I'm proud of you. Yeah, you know, should really be actually also giving the pat on the back to Amber. She's had to live with me for all these years. But yeah, I guess we get through it. Now, here's the deal. Let's also go back to WDC. Why are we pulling up WDC? WDC was an example of a potential snap back rally. Now, just really quick, we talked about this, and if you look at this, we kind of had like some support area there, and then we had a channel here. Now, all traders don't necessarily look at the same thing. Cameron, he might look at income stocks, lower beta stocks, things like that. If you ask me some of the things that I like to look at, just for example purposes, snapback rallies, okay? If we take a look at this, this is kind of where, hey, the price falls down below support, and then all of a sudden, what should be resistance is not resistance anymore. We're now getting above that 452. Today, I mean, it's only been this morning, okay? And if we look at this, if we start getting above that 452, we had a buy stop. What was that price? The buy stop that we had yesterday was 463.27. We did a buy stop limit. And if we look at today, you're going to see that it poked right there. So we opened up at 453. The order from yesterday was at 463.27. with a buy stop limit being, or the cap of the price being 465. And that price pushed up. We set a target at 560, and that target was not at the high of the high. We put it a little bit less. We put it right there. WDC did trip as well. That was a stock position. Okay, now, so I don't have anything more to say on those. We did another one, but the one that's also getting a little push here is Micron. Now, there's good and bad here, okay? When you get these stocks to move 60 daggum points, 6.5% in the morning, you can get the bid-ask spread in these options to be a little wide. That can be an issue, okay? And maybe this is where the investor says maybe stocks are better than options. Well, let's go to this for just a second, okay? If I looked at Micron for just a moment, and I'm going to pull this up, let's go Micron, okay, MU. Now, it's not going to be the one that we actually look at for the trade example. I just want to look at the spreads for just real quick to see what I mean. The other thing that's kind of has something against it is it's $1,000 stock price. So you got really a bid-ask spread of $1 wide. So in other words, to get in and out, it might be a little harder because you have to overcome the spread, okay? Now, what I'm going to do is I'm not going to look at Micron, but I'm going to go to one that might be a little bit less in price, INTC, Intel. Now, do you notice something similar on Intel that we actually just showed on WDC? Now, if you're not paying attention, then I just feel bad for you. All right, now, what's the similarity? It actually fell down below support. It actually is now getting above support. Now, why did you look at actually INTC? Well, first off, it's lower price. Second, the spreads might be a little bit better. Now, if we go back to the go to the trade tab, INTC, what's the spread? Oh, there's the 20 cents we talked about. Now, if we take a look at this, let's say the investor said, James, I want to now I'm going to show it both ways, okay? I'm going to decide we're going to do a stock trade. Now we're going to do it fast, okay? We don't have to always do it slow, for crying out loud, okay? Why does everything have to be so slow? And then by the time I finally learn investing, I'm like at the point of expiration of my life. Let's get some practice here. This is like playing tennis, okay? I'm not going to just hit it to you twice and then say, okay, thanks for coming for the tennis lesson. I'm going to show you 5 or 6 trades, and let's speed it up a little bit. Why? Because we can. Now what I'm going to do is I'm going to right-click on this chart, buy custom, and this is a stock trade. If I right-click on the chart, that is a stock trade. Okay, here it is. Stock, 105.64. That's a limit price. That price or less. Target. We're actually going to put the target, I'm going to put it about 126. Why did you undercut it a little bit? Well, we're planning on that there's those other technicians out there. They're trying to set their targets perfectly. We're trying to undercut. We're trying to sell out ahead of those other investors that might have their target a little higher. Now, if we did that and it overshoots, then we feel like we set our target too low, but we're trying to have a greater chance of the target hitting. Now, we don't know if it's going to hit. There's a probability associated with it. 126, I'm going to go dated GTC, dated GTC. Okay, now, when we look at this, if we said, where do we see support? Now, when I say support, I'm thinking like the last 1 or 2 weeks, a horizontal or a diagonal support. Well, that horizontal or diagonal support is probably about right there. If we set a tight stop, it would probably be right around, let's say, 99.75. Okay, so you can decide for yourself what number makes sense for you. If I said I'm going to set a little tighter stop, 99.75, okay, you set a tighter stop, you just have a greater chance of getting stopped out, 97.75. Now, there's another reason why someone might set a tight stop. They want a greater number of shares. If you set a looser stop, you don't get as many shares when you position size. Now, when we go back to this, now this is a good problem to have. Earlier this week, we were at 61,000. Now we're almost 63,000. One of the greater things about getting richer, okay, is that the investor says, I'm still willing to risk 10% of my portfolio, or invest, I should say. Now it's not $6,100, it's $6,290. So we're going to come in here and say, look, give me not 6,100 like we did on Monday. We're going to say 6,290. Now what we're going to do is, how many shares is that? 59 shares. Now, when we talk about trading the trend, do we know that this is going to move to the upside? Nope. When we say trading the trend, we're trying to get those trends 2 to 3 weeks or more. The thing is if it goes up in 2 to 3 days, we're not counting on that. We're thinking something minimum 2 to 3 weeks to get the trend. Now, if we take a look at this, target, stop, okay? Yeah, now the comment was watch 2x speed, okay? So I grew up in upstate New York where sometimes they talk a little faster. Some people have said, James, others I might be able to speed up. With you, I'm not able to speed up. When I watch things on YouTube, I'm always 1.5 to 2 times speed, and I feel like it just gets to the point sooner. Okay. Good content, but it's just like sometimes people beat around the bush. I would say for me, maybe watch it at 1.5. 2 might be a little quick. Okay. Trade number 1, target, stop. Remember, if it goes to that price or less, sell the shares. We don't know what that price is going to be. Send it. Now, that's trade number 1. Now, when we go back to this, I'm going to say the investor says, you know, James, I don't want to actually commit the capital. I'm going to do a different type of trade on this. Now, you're going to notice that the break even on the stock is what we bought the shares for. Now, we could do a different type of trade, but now what I'm going to do is going to come in here and take the September expiration with 36 days expiration. I'm not going to buy the shares. I'm going to say, look, I'll buy the shares at the strike price by selling the pet at the strike price. Now, if we look at the put side, we got strikes 105, 100, 97.5, 95, 92.5, 90. Well, each one of those strikes has a certain probability of the stock closing below the strike at expiration by a penny. Now, if the investor was very confident, they might say, I'm going to sell the 105s. 45% chance to be below that strike by a penny. If someone said, I'm not sure if I'm that confident, they might take the 30%-ish chance, 97.5. If you go down to the 92.5, 23% chance to close below that strike by a penny. And if you take a look at this in this case, let's say the investor says, look, I maybe want to kind of get the middle of that. Now, if we sell a strike lower, continually lower, the premium is lower. Okay. Now that premium is not low. Now you might say, well, this is the same trade. It's not the same trade. Okay. Different break evens, different strategy. Trade number 2, we're going to actually click on the 95.5. We're going to go sell vertical. Now, wait. When you do vertical, okay, now you're thinking vertical like the next class after this with Brett Crowther. That's not what I'm talking about. We're going to come down and say, could we buy the put below? Why? For downside protection. Now, when we open up these strikes, it's not that we ever think that put is going to be worth something. Could be, but not counting on it. We're buying that put for downside protection. Now, I'm going to imagine you have an IRA. Your wife has an IRA or your husband. You have a margin account and maybe a grandkid account. Okay. And you're kind of trading in multiple different accounts. Now, let's say the investor said, I want to sell the 95.80, but I want to do it not just in the margin account. I want to kind of launch the trades in a couple different accounts. Let's go to multiple accounts. What multiple accounts? So if these accounts are linked to the same username and password, I'm going to sell one in the margin and we're going to do 2 in the IRA. All right. Now, some people say, well, I do different trades in different accounts. I don't necessarily think that has to be the case. Okay. A trend is a trend. Different accounts might have different allowances as far as what they're allowed to do, things like that. By the way, there's some nice features. Check me on this. I think if you went to the home screen, there's actually some drop downs where it shows you the accounts that you have, what allowances as far as trading privileges, things like that. Be made aware of that. Kind of some nice features there. I'm going to go ahead and in this case, send the order. There it is. Okay. So trade 2. So trade number 1 was a stock trade on Intel. That was kind of that snapback rally type of setup. Trade number 2 was a cash secured put, launching that trade in the margin and the IRA. That's why it's showing 2 right there. 2 lines. Sell 1 in the margin, sell 2 in the IRA. Now, let's also go back to something just really quick. And I want to just fast fire through a couple of these sectors that we've talked about. Now, number one is we do see a little movement in transports, a little bit. Okay. Oil down a whopping dollar here today, not life changing. Okay. When we look at, let's say, real estate, the index, real estate getting a little push. Now, it's been up, down, up, down, up, down, but sometimes that's fine. Stay above support level. It's underperformed as of lately as the growth has taken over. Obviously, the transportation. Well, you know why I'm thinking transportation of the ticker symbols we talk about tomorrow. IXT, not what you're thinking. There's the brand new high on the technology sector, not a surprise. The IXR, which is staples, grinding. Now, there's a couple names in there that kind of show a little push. Healthcare, you're seeing that not too far off the high. Energy, right there, even though oil is down a dollar. Now, you got to remember, energy stocks, are they related to crude oil more, or are they related to, let's say, the S&P 500? We could go back and look, bring it up on correlation down at the bottom, put actually CL on the bottom, correlation, put on the S&P 500. We'll show that in just a quick second. But if you look at also gold and say, is gold actually trying to smash its way through resistance? Not yet, but it's right there. Now, I want to do this just really quick because we talked about energy stocks just to be fair, okay? What I want to do just really quick is, let's imagine we're looking at, let's say, energy stocks. We talked about Exxon, Chevron, ConocoPhillips, MPC, PSX, among others. And I just want to kind of look and see what correlation has been stronger. The first correlation we're looking at is SPX. Second correlation we're going to look at is crude oil itself. We're going to use crude oil. The proxy for that is going to be the light sweet crude. Now, what we're trying to figure out is what has a stronger correlation. Now, when we say correlation, high positive correlation would be 1. Okay? High negative correlation would be -1. And you're going to see that there's also been a benign, hasn't really been correlated to the SPX. And I'm saying the energy sector. Feel free to look at the energy sector we talk about tomorrow. But on this product, the IXE, it's not positively correlated or negative. You pull up, let's say, crude oil itself. Oh, there it is. Now it makes more sense. Has the energy sector been more positively correlated to the S&P 500, or has it been more positively correlated? More positively correlated would be 1. It has more of a correlation to the oil price. All right, so now that makes more sense. But if the S&P 500 goes up, that doesn't necessarily, it hasn't recently impacted as much the energy sector. So that's why we watch the crude oil prices. Now, let's go to the next trade. Now, what I want to do is, I also want to go back to, now let's say you said, James, I don't always like these big moving stocks. I mean, I want to die of natural causes, okay? I don't want to try to get stocks that maybe give me, I can't sleep at night, chest pain, things like that. Guys and gals, you need to remember that the whole portfolio is not supposed to be SanDisk, okay? Things like that, they're kind of one-offs, they're high growth, things like that. Sometimes people want just kind of more proven business models where they're more predictable. That does not mean boring. That just means that the companies are kind of growing more in line with the growth rate of the economy. Now, example given, MRK, Merck. Now, Merck, if we take a look at this, we see that it had on a 3-year weekly chart, we kind of have a big V pattern. Pia will come back to Marvel in just a second. Trade number 3, Merck. Now, question we got to ask ourselves, wait, is Merck in technology or is it in healthcare? Answer is healthcare. Now, if we pull this up, now, when we say fundamentals, what do you really mean by that, okay? When we look at the fundamentals, it had kind of a struggle. It had a time really in 23 on earnings per share. It dropped. But really, when you look at 21, 22, 24, 25 on annualized numbers, it's been pretty solid. Okay, sales per share, revenue divided by sales, average number of shares. you're going to see 19, 23, 23, 25, 25. Okay. So kind of more steady. But when you look at that return on equity, that's not a small number. Okay. When you look at also some of these, when you look at the technical analysis of it on the weekly chart, showing maybe, if you could say this, maybe a little cup and handle. This on the right-hand side being the handle, this being the continuation. Now, again, sometimes we don't always want things to be semiconductors in the whole portfolio. Okay. What I'm going to do on this for trade number 3 is we're going to buy those shares of stock on Merck. Now, we already went past the earnings. I'm going to right click on this, and I'm also going to look to see buy custom with stop. Does everything have to have a target? Not everything. You might say, look, I'm just trying to ride that trend. I am trying to get assets. Okay. We're trying to maybe buy a paper asset that might appreciate in value. Maybe does it even pay some dividends? Well, when you look at, let's say, Merck, it does pay a dividend, 85 cents on a quarterly basis. The ex-dividend date, 9/15. That's the first day it trades without the claim to the dividend. Many of us are thinking, can we just hurry till September so I can get the daggum dividend? I know some of us, that's what we're thinking. Okay. If we take a look at this, now remember, dividends, they can go up, down, they can be cut completely. It's not guaranteed. Yield is actually 2.53. What I'm going to do in this case is we're going to buy those shares. We're going to go back in 6,200. I'm going to run out of money quick, I can tell. Let's say, now, by the way, I'm going to kind of show this in different ways. So I'm just going to set the stop first, and we're going to launch this or try to in both accounts. One Intel fills 127.55, less 2%. It's going to be 124.99. 124.99. You can run the numbers on that on the Excel if you have that for yourself. There it is. Now, what I'm going to do in this case is I'm going to go confirm and send for just a moment. Here's the trade, right? Limit price, that price or less. Stop, sell at that price or less. Could be filled at a lower price. Going to go down to single order. Multiple accounts. Now, here it is. So in this, what you're now going to see is, let's imagine we said, look, I'm going to buy, let's say, how many shares could we buy? Let's go back to the trusted calculator. 6190-ish divided by how much? 134 and change. It's going to allow us to buy about 45 shares there. Okay. I'm going to say that we could buy 100 shares in the IRA. I hope that can get filled. So in the margin, 45 shares, buying shares of stock, nothing here about options. IRA, 100. So now when you actually take a look at this, if we send the order, okay. All right, now let's pull this back up, messages. Now we actually see 145. When we do that, we launch in both accounts. It's not, it's going to now default to total all accounts. Okay. And there's the margin. There's the IRA. Well, what are these? Well, what this really is in the margin account, we have them separated by the types of trades that they are. That's what that is. So trade number 3, Merck. All right. Yeah. Look, Jenny says running out of money is a big problem for me. If we go on vacation, that could be eating some of the capital that could buy something. If we go on vacation, yes, we had a good time, but at the end of vacation, the money is gone. If we actually say, look, let's just watch YouTube on someone taking a vacation, okay, looks fun anyway, didn't even have to go to the airport, keep the money and try to have that cash in the asset column and actually try to get some income off that, potential dividends, and capital appreciation. Now, this is where sometimes as investors, I know people say, look, James, you got to live. I understand. Okay. But the biggest actually thing is we're trying to grow the portfolio value, grow the income, have less potential liabilities and less potential expenses on a relative basis. That's the decision you got to make. If the investor never commits to that, they might stay in certain pictures of that diagram they don't want to really be in. Okay. Now, if we take a look at this, let's go back to Marvel because Pia had a question on it. Now, Marvel, if we go back to this, and I just want to go back to this real quick. So remember, one way to kind of see diagonal lines of resistance is to change the candlestick chart to Heikin Ashi. Now, Heikin Ashi is, if you said, I don't even know what that is, you could actually go look in these studies and it will actually show. The Heikin Ashi was really, it was probably back in 2005. There was a gentleman named Joe Johnson. Okay. He and I used to talk about him quite a bit back in probably '05. And we kind of shared it in class a little bit, but that was 20 years ago. Okay. And really at that time, no one really even knew what they were. Okay. If you said, I still don't know what they are, you can actually go to that little, you can go up to here to that little test tube. A lot of these type, or you could actually even go to the glossary on the Thinkorswim, and you could actually search up Heikin Ashi. I'm not sure if there's going to give us a definition, what that really is, but there's also a glossary that you can actually see right on Thinkorswim, and you could just type in Heikin Ashi and it's going to show you. More of the story is it smooths out the candlestick charts, okay? To get a red candle, you really have to have two red candles. To get a green candle, typically you have to get two green candles. So it's taking out some of the noise, okay? Now, remember, how do you see lower highs? Simple, green, red candles. Who created that? I did, okay? Why did you do that? Well, because I was trying to see where you could see the lower highs. And how do you see the higher lows? Red and green candle, red and green candle, red and green candle. Try to simplify. I'm just a simple person, okay? So you flip this, green, red candle, green, red candle, green, red candle, green, red candle. So you might say, well, who cares? Well, the person that's actually trying to watch the trend line cares. Remember, there's technicians from Texas that would say a comment such as, I don't do anything until I see a break of a line. Well, that line could be horizontal or diagonal, okay? So if I said that we've been in a downward trend, there's been lower highs. We're going to go from low, the lower high, to the second lower high, to the third lower high, to the fourth lower high, just like that over and over again. And we're going to say, did we break that line? Now, the reason why I yawn like that is because I think you could probably teach someone that doesn't know a whole lot how to see lower highs if they could just see a green and red color candle. If we then say, could you draw dot to dot to dot, touching each one of those? Yeah. Now, what did you notice? Diagonal breakout. Now, if you look at this on the chart, well, how do I know where the higher low is? Oh, don't ask me something like that. I've been very calm today. You'd have to give me credit for that. I've been very calm. Now, if we take a look at the higher low is just the red and green candle. Red is where we stopped going down. Green is where we started going back up. Seems like an advanced concept. Maybe not. Now, if we go back to Heikin Ashi, go back to candle chart, there she is. And so we're now going to say, look, if we can stay above that area here, 212.38, that might be an area of support. The last spot that we actually had higher low on the daily chart is really right around 205.80. Now, why do we want to know about technicals and fundamentals? Look, we're looking for some of these horses, stallions, thoroughbreds that just don't just go up slowly. We're trying to get those trends to smash to the upside, right? Now, that doesn't mean that some of these Coca-Colas, Targets, things like that, Walmarts are completely boring, because that's not true. Okay, they've had some strong trends. But if we could get a couple of these where they could really pump to the upside, interesting. Now, if we went back and said, where do we see resistance on this chart? Well, let's kind of say resistance. Now, the other way we could filter out to kind of see it, go 3-year weekly chart. 3-year weekly chart on this, we don't see a whole lot of consolidation. If I went back to that 1-year daily chart, and I went back to Heikin Ashi, which is the second, we said word of the day was semiconductors. The second 2 words of the day is Heikin Ashi. Now, if we actually look at this, that breakdown that we had was at 259. Now, let's imagine the investor said, you know what, James, so I'm going to try to target that. I'm going to look and see if we can't reverse. Now, in some of these type of trades, the investor might say, James, is it possible to do maybe like a long call vertical? Why that strategy? Well, the investor might say, now remember, some of the cons about these semis, they're wider spreads. Okay. So you just have to realize that. I'm going to show the example anyway. But if we look at this and said, look, we're going to choose the at the money call and sell the out of the money call, we're going to verticalize it. We're buying the 220, selling the 230. Debit is what the investor could lose given the vertical, long call vertical. Spread $10, gain, max gain, just the difference, 517. Remember, on these verticals, some investors might consider these because some investor might be saying, look, on these bigger dollar stocks, I can't really trade that many shares. Now, could say the same thing about SanDisk, didn't really make a whole lot of difference. Yeah, remember, it's pros and cons, right? Big dollar price, stock price, big dollar movement potentially. So it's kind of more like small shares, but that's not telling the whole story. Someone says, I don't want to buy shares, I want to get some leverage, but have built-in max gain loss. Welcome to verticals. This being a long call vertical. Now, what you're now going to see is there's the commission, and that will be our fourth and final trade. Not too bad, okay? Now, so we did 4 trades actually here in about 20 minutes. Also want to go back to coming up in our next session. We're going to be having the class on short verticals. Brett Crowther will be teaching that next. I also want to say thanks to Cameron May for answering those questions in chat. And also remember, don't forget that you can go back on this schedule and you can go back and look at other classes on this calendar, okay? And so you could say, well, how would I see what Cam taught? Well, you just go over here and say coaches, Cameron May. And what it does is it filters out any class that Cameron May taught. Make sure that you're getting used to that calendar and how to use it. Simple. Okay. Now, remember that with what we discussed here today was done for example, illustrative purposes only. All investing involves risk. And this has been the class on trading the trend. Believe it or not, you're on a trend financially on your income statement and balance sheet. What trend is that? Do you like it? Do you want to change it? You're also, if you have a portfolio, you're on a trend technically. Do you like it? Do you want to change it? Well, that's what we want to get you here today. Take you to the edge and say, where am I? Where do I want to go? You get to decide. With that said, stay tuned for Brett Crowther coming up next. I'll be back on tomorrow morning with ETFs. Thanks so much. Take care. Bye-bye.